Now, next up, we have a panel discussion named The Rise of Bitcoin and Crypto Assets. What do investors need to watch out for?
So, warm welcome to our panel today. I'm very pleased that so many of you guys are sitting with us here in the room. Today's topic, as Marcel already explained, is the rise of Bitcoin and crypto assets. What do investors need to watch out for? For that reason, I'm joined by experts in the field. I'm joined by Alex von Frankenberg. I will give you room for an introduction later on. Then by Frank Wagner from Invao. Done by Martin Leinweber of Alexander Eberling and Berken Menges. And before we start, I invite you to introduce yourself. Maybe you make a start, Martin.
I have no mic. Yeah, thank you very much. My name is Martin Leinweber. I am working as a digital asset strategist at Market Vector Indexes. We are an indexing company, I think pioneering in the field of equity thematic indexes, but we also started in 2017 to build digital asset indexes, starting with the Bitcoin and Ethereum indexes for ETFs, and now we've evolved to a lot more multi-token indexes, categories, and sectors as well.
Perfect.
My name is Dirk Gröder. I'm the head of Blockchain's Solution Center from Deutsche Telekom T-Systems.
Yeah, my name is Frank Wagner from Invao Group, co-founder and CEO. Digital entrepreneur since the early 2000s, and as an investor, it's not my first rodeo.
My name is Berken Menges. I'm the head of marketing at Cointracking, and Cointracking is one of the leaders in the crypto portfolio tracking as well as tax reporting space. So this is our main goal, to make it more easy for every investor as well as individual as well as corporate to have an easier possibility to do their taxes or track their investments.
Perfect. And last but not least, please, Alex, introduce yourself.
Yeah, I'm Alex Frankenberg, Managing Director of the High-Tech Gründer Fund. And what we've been doing now for 17 years is look for great and disruptive technologies and finance startups. And I think the crypto space in general offers a huge opportunity of disruptive technologies, and especially certain projects like Bitcoin, smart contracts, and others. I think the whole crypto universe is going to change the world, and I think that's totally fascinating.
Perfect. Thank you very much. In general, if you do have any questions, please don't hesitate to raise your hands. We are pretty open to take questions as well from the audience. Before we start, I would propose looking at the market right now. So a lot of things happened this year. For example, the merge of Ethereum happened. Then we have rising inflation, rising interest rates by the Fed, by the ECB, for example. Then Bitcoin prices are roughly flat, but down approximately 60% from last year. We had a sharp drop in crypto prices, which then had the effect of the Terra Luna disaster earlier this year. And last but not least, while we see retail investors actually refraining from investing currently, we do have the feeling, or we see it at least at Rudy Capital, that institutional investors are actually having crypto at their agenda. Do you have anything else you would like to add to recent market trends? Is there anything you see right now which is important to take up front before we start discussing?
Well, I think what's interesting, especially in the last few weeks, is when you look at bond volatility and the rise in bond volatility. It's even bigger than in Bitcoin, for example. So you see that all this Fed manipulation and what the ECB is doing and all the other central banks around the world has led to a drying up of liquidity. And I think that's a big surprise for a lot of investors. And I can imagine with the worry a lot of investors now have, what do I do with my money? What do I do with my government bonds? I think there could be a narrative shift again for Bitcoin, that you have something outside of the government system, so to say, digital gold. And I think that's pretty interesting to see. And you also see it in the volatility in the last days. It's pretty low. It's holding at 19K, and I think that's an encouraging sign at the moment.
Yeah, I totally agree. I would like to add, indeed, the volatility in other assets has been much higher, like real estate stocks. And I think if you double click on Bitcoin adoption, I think there's very positive signs. You see many companies in various ways adopting Bitcoin for heating, for surplus energy, for payment with their customers. We have seen another country, the Central African Republic, and cities, Madeira and Lugano, adopting Bitcoin. And I think the indicators on Glassnode, like number of wallets with a certain amount of Bitcoin, has been increasing steadily. The Lightning Network capacity has been increasing. So I think beyond the price action, I think there's very, very positive signs regarding adoption.
I would like to make a case for Bitcoin. Bitcoin is for enemies. It's for you, it's for them, it's literally for everybody, because Bitcoin is your iron dome against invasive governments without firing a single rocket. And therefore, Bitcoin is peace, and it achieves this by 3 simple things: math, cryptography, and energy.
Perfect.
Yeah, you're describing the perfect storm. So all the stories of this year. Alex, I like your background, by the way. It seems that you are still cool and relaxed and looking into a bright future. And I cannot agree more with this. I think being an entrepreneur and investor for more than 20 years, again, it's not my first rodeo. So investing is like a roller coaster ride. And the problem in most of the financial markets is when it goes up, everyone is enthusiastic. And when it goes down, they all want to leave the car. That's the worst thing you can do during a roller coaster ride. So I would rather call for a feeling of serenity. Yeah, let's stay cool, let's wait. Actually, we see the perfect storm outside, and that's what Bitcoin is made for. So just let's stay cool, hodl, and don't mix between gambling, that's what we have seen exactly a year ago, and investing and saving for life. These are 3 different things. I'm actually working with an asset manager, so my company, the Enviro Group, we are on the investor side. Personally, I'm educating my kids, save Bitcoin and other digital assets for your life. Much better than yours. And if you're on the gambling side, so enjoy the ride, but probably now is not the time for it.
Berken, did I miss anything or would you like to add something?
Yeah, I would just add that I think when you're in crypto, you have to be on a long-term basis because it's way less stressful and way easier to understand all of it and see all the stuff that is happening. And maybe to add to Alex's point as well is that the hash rate is at the highest it's ever been. Ethereum, I think, has as well the most ever wallets created right now at some point. So everything's going into a direction. Of course, the headlines aren't always the best, because negative news sells the best, positive doesn't, kind of. And I think it's all going to a direction where we all can benefit from when we all kind of stick together as well.
Martin, the current market is often compared with like the dot-com bubble in the late 90s. Would you like to say that this is a realistic point of view, or what would you like to add to that?
Yeah, if you look at the number of tokens out there, we have, it depends where you're looking at. If it's Coinbase, CoinGecko, it's over 20,000 tokens. And I think it's fair to say that most of them won't survive. Yeah? And liquidity and also market cap is super concentrated. So we have a top 100 index, for example, with the top 100 constituents. And they almost make up the whole market cap. Yeah. So, and when you look at professional investors, they focus maybe on the top 20, top 30, maybe top 50, some hedge funds, I would say. So I think you have to count on that. There's one constant in investing, and that the number of winners are vastly outnumbered by the losers. Yeah, so that's also in TradFi. If you look at the S&P 500 from 1950, the 500 components, just I think 51 are left today. So we still can't invest. And I think the number, I guess, is even lower in crypto. But it shouldn't be a surprise. It's a new technology, and you see it also in the volatility.
So you mean we see right now some kind of consolidation in the market, right?
Yes and no. The thing is, if you look at the numbers of tokens growing, it's steadily growing. No matter if we are in the bull market or in the bear market. That's interesting because it's so easy to issue a token. Yeah, it's pretty cheap. It's cheaper than building up a company. And we still have coins nobody likes, yeah, like Litecoin, Bitcoin Cash, still there. You have Terra Classic, you have Ethereum Classic with, I would say, no use case, and they still have a lot of market cap. So this is maybe a conundrum in the crypto market, but it's just a short time period we are watching it. I think over the next years, it should work out that you see just the larger ones, the more established ones will win.
Alex, in your point of view, is then Bitcoin momentarily the only asset investors should invest in, or what is your point of view?
I'm a bit of a Bitcoin maximalist, so I personally focus very much on Bitcoin. But on the other hand, we know that it's not going to be the only coin left, and there's going to be other applications that are better suited. I mean, other coins that are better suitable. Bitcoin is targeted very much towards stored value and payment. And then maybe the smart contract functionality is in other coins. I do believe that in a limited number of segments, there will be a limited number of relevant tokens. So maybe 3, 4, 5 in each segment, and then how many segments there will be, we will see. So I think out of the like 20,000 tokens, I don't know, 19,900 will basically just fade away. Will just not trade anymore, have very low market cap. It will consolidate because I think the token, the network effects will lead to natural monopolies with only a few players remaining, just like Facebook, and then a few more social networks, and just one Google, and maybe a few more search engines, but not like hundreds. So we're going to see a very similar. So I think for the store of value application, Bitcoin has already won. The market share of Bitcoin in terms of store of value tokens is 99%, because all the other forks and Litecoin and all the others are less than 1% of Bitcoin. So it's already the dominant standard, the de facto standard. And the very interesting question will be, will it take over store value functions of traditional asset classes like stocks and bonds and real estate? And then it's going to be very huge. So if you believe in a fragile financial system, which is under severe pressure, high inflation, which is likely, and unsound fiscal policies, which is also very likely, then the store value function is key. And then we will see that Bitcoin will take over store value functions of traditional asset classes, and that's going to translate into a huge increase in Bitcoin valuation.
Perfect. Do you see some probabilities, for example, for the flippening, for example, that Ethereum will take over Bitcoin? What are the chances?
I simply don't know, and I don't care so much, honestly. Okay. For me, it's just very important, really, please, as an investor, private investor or institutional investor, please make a difference between gambling, investing, and long-term investments. So if you're talking about long-term investments, then you need a belief. The belief in the store of value of Bitcoin, is there a use case? Ethereum being an operating system for the crypto world, is there a use case? First you have to learn it, second you have to understand it, and then you should invest. And invest is exactly the opposite of coin flipping. Not the flipping between Bitcoin and Ethereum, I mean coin flipping, gambling. If you're a gambler, buy your Dogecoins, follow Elon Musk on Twitter, do whatever you want, but the outcome may be a different one.
Dirk, what do investors need to understand, maybe adding on Frank's points?
I think he made some pretty good points. I'd like to add that not your keys, not your coins. I guess all the experts know this. I think this is very important. And another thing I would like to trust the partners you get in bed with. So if you're doing stuff, understand what the partner is doing, you know, do your own research. I think this helps, and be prepared for a bumpy ride, I guess.
Birkin, what has changed in the environment from your point of view in the recent months?
I would say, not when it comes to, I think since the market has less volume, there's not that much spikes when it comes to different altcoins or any coins as in particular. But also to add maybe to that, I think you guys are 100% right, but I think it's still kind of interesting to see what's happening in the space and trying themselves out. So I've tried a little bit, and of course I was ready to lose money as well because I wanted to try things. And by trying these things, I think you understand the whole space a little bit better, and therefore, not as an investor, but let's say as a private person, and therefore you get the solutions why some things maybe will work in the future or not. So that's the same thing. I would have loved to be in the .com bubble as well, just to learn things, just to see how it all developed, how the beginning was looking like, and therefore what solutions did work in the long run. So that's I think a very exciting point as well to just watch and explore a little bit.
Can I add something to the .com bubble you mentioned and you mentioned? I don't like this word so much, honestly. .com bubble, that sounds just the bubble burst and it's going away. That's not right. I can remember these folks in the late 1990s, early 2000s with their fax machine, their landline telephones, their suits, and explaining to me this internet will go away. It's not. And these are exactly the same people telling me now that Bitcoin has no intrinsic value, it's all fraud, that's just nonsense. So if you really understand crypto or the different coins and tokens, just overcome it. Serenity, again, resilience, and don't care about them. So I don't see a bubble burst here.
I might add that you have to distinguish between what investors are we talking about. This is the real retail investor. I think like a good recommendation is DCI, you know, so buy like on a monthly base, I don't know, $20, $50, whatever you can spare, and you're ready to lose. If you're an institutional one, I guess you have professionals or supposedly professionals who make the decisions for you. But I think this is two different approaches. And like personally, I was asked, like friends and family, like I have like 5,000 euros saved. I'm now investing it all in Bitcoin or Ethereum. And I will always say, no, you don't. Because they are not used to the volatility. So just put in like smaller amounts, get your feet wet, and then see how it goes.
I mean,
maybe an interesting,
yeah.
Sorry, very brief, very interesting perspective, because we mentioned the internet and the .com bubble. I think especially the Bitcoin blockchain is a pure blockchain. It's truly decentralized, no one controls it, and it cannot be manipulated like maybe others, cannot be easily changed. So, and I think it's not just the token as store of value, it's also, just like the TCP IP network, a foundation for other applications. So a different perspective, especially on Bitcoin, because it's such a pure, and I think the best blockchain is other applications will be built on top of it. Just like Facebook and Amazon was built as an application on top of the internet. And I think that's a whole nother perspective, because we will see many more solutions. For example, I just posted on Twitter a few hours ago that you can use Lightning wallets as login IDs, as unique login IDs. So that's a tiny applications that might be really relevant. Or you could put your government ID on the Bitcoin blockchain and no one can control it, no one can manipulate it. So I think the technology perspective might be very, very interesting for Bitcoin, but also for the other blockchain solutions.
Actually, that's a pretty important point, and I would like to give the word to Birkin. What is actually missing for professional investors?
I think when it comes to that point, probably most of them need like software maybe to track their investment as well, to see what is happening and in which direction. That's something we're as from coin tracking are working on as well, so that corporates has the possibility to track their portfolio in different ways, since security and all of that is a part of all this conference as well. We're trying to improve in that direction as well. Right now, it's mostly used, of course, by corporates which are like CPAs, all that, so they can help their mandates or their customers to track and do their tax reports. Still, a lot of people don't even know that you have to pay taxes on cryptocurrencies. It depends on your country as well, of course, but that's what we're trying to do, and like trying to help them and trying to help them understand as well that there are some things you have to take care of when going into the crypto industry.
Mm-hmm. Martin, are there any other things?
No. So market infrastructure-wise, I think we are in a good way. Yeah, so we have strong custodians. We have the fund industry, asset management industry in it. But I think what we are really lacking is still a reliable price. Yeah, and you see that we put a lot of work on it to try to construct a liquidity-weighted tape. And it's one thing which always the SEC criticizes in the US, that they are still thinking there is price manipulation, and they are worried about the lack of a regulated price. And I think that's the key issue we still have to see. And I think we need the US on board in order to get a really large adoption in the system, as it's still the largest capital market in the world.
We heard about crypto, taxation and infrastructure. Dirk, in your perspective, what about DeFi? Is that something which will gain traction the next months?
I don't know about the next month, but I think DeFi has made a dent, and it will make dents. But I think it depends mainly, on the market and how the market develops. And I think if I would run an exchange, I would be scared.
Are your clients actually demanding access to liquidity mining or lending, for example? What is your take on that?
Our clients mainly are interested in staking. So we offer this validator as a service for various blockchains. So there is no requests for DeFi or liquidity mining yet.
Frank, you are very active in a lot of geographical markets. Do you see any differences between German investors, professional investors, or investors from the Emirates, for example? What is the difference?
Yes, definitely. A couple of years ago, there was a lack of education, especially in the Middle East, in comparison to more educated markets like the US and also Central Europe. That flipped. So in Germany, especially in Germany, you have the phenomena of the German angst, not only when it comes to COVID, also when it comes to investments. And in the UAE, they are bullish. They are building a lot. They are investing now even more into the future than we are doing in Germany. And that's also a general observation. This crisis is a very European, a very Western crisis. But we are not alone here in this world. So if we have a negative perspective for the moment, it doesn't mean anything. So there is a difference. And maybe I can add something else. When we are talking about time frames, so we don't know where Bitcoin will be tomorrow. I have also no clue what will be the Bitcoin price in US dollars next year. But I'm really confident when we are talking about 5, 7, or even 10 years. Talking about the euro, talking about the Volkswagen, telecom stock, I'm pretty confident. I have a good idea where it will be tomorrow, maybe next year, but I have no clue where it will be in 10 years. So it's exactly the opposite. So that's why Bitcoin and crypto is a perfect hedge. Nothing against Deutsche Telekom. I'm a loyal customer for many years.
You love them.
None taken, no problem.
No, perfect. Are there any questions from the audience you would like to address to the panelists?
Thank you.
Hello. I wonder a bit why we are always talking about coins and token as an investment and not about the technology as an investment. So distributed ledger is the optimal investment to reduce workflow, the need of reconciliation, intercompany, intra-company reconciliation. It reduces all these faults and efforts to get processes smart and fluent. Therefore, an investment into the technology itself is the best investment. So I don't care about Bitcoin and Ethereum's value. I care about the infrastructure and its value.
So what is the question?
Why we don't talk about it?
Okay.
Can you measure the value of an, let's say, if a large German bank invests into intercompany reconciliation by DLT and the reduction in costs of their workflows? Can you measure it?
I cannot, maybe Martin, you can.
I think I didn't understand the question. So, yeah.
But basically, when you invest in a startup that works with the blockchain technology, and then the startup does a great job and its value appreciates, that it reflects the value of the technology, and the whole the value of all Bitcoin coins reflects the value of the technology. So I think investing in startups is about investing in technology.
Yeah, I totally agree, Alex. I think it's an investment in technology. But coming back to your question, if a bank enables blockchain technology to do whatever finance stuff, their share price will appreciate because they find some efficiencies their opponents haven't found yet. And then that's what's going to happen. But the thing is, like, what technology are they using? They are using protocols. Usually they're building on top of other blockchains, like layer 1 solutions. So yeah, and then of course the layer 1 solution is going to appreciate in price as well. So at the end of the day, I really didn't get the question like perfectly. Sorry.
And take it afterwards. Yeah, perfect. To close the panel on a positive note, maybe all of you can give me one strong point. What can be a positive thing about the current market environment? Maybe starting with you, Bergen.
What can be positive in the current?
So what positive thing can we take from it? So what can we learn, for example, for the future, or what?
Yeah, I think when it comes to the whole environment, in my opinion, of course, is when you just try different platforms or different projects or anything that is in that space, it's nothing you lose, kind of. It's just the metaphor. Always, when you're on Instagram or something like that, they will say you lose anything, or when you fall, you just step back up. So I would say it's just you don't lose any in time or money. You just learn new ways to maybe cooperate in that system, or try to develop new things, and maybe you'll find, or somebody else will find the next solution for the problem in that space. So we'll just keep moving forward, kind of.
Frank?
Should I be next? Okay. Well, if you get the point what these coins and tokens are made for, and you are not a gambler, then it's just the perfect time, because all these useful coins and tokens are on sale. They will never be so cheap again, so use the opportunity.
Okay, yeah, I agree. So basically, either you're a retail investor or you're an institutional. This is the perfect time to get your toes wet.
Yeah, I think it's a very encouraging sign that even in this strong bear market, the protocols works, DeFi works, Bitcoin works, and nobody called the Fed or the Bank of England from the protocols to do something. It's normally the TradFi world. And this question, I didn't get it to 100% right, but it makes me bullish again, because it's always during the bottom of the bear market that people say, we need the blockchain, but not Bitcoin.
Alex, is there anything you'd like to add?
It's a time for learning, experimenting. And I think one group of participants who are learning the hard way about reserve assets and inflation are the central banks of the world, because most of their reserves are fiat currencies, other government bonds. And on the very positive note, I believe that in the next few years, we will see significant adoption by central banks, which will have a very significant price impact on Bitcoin, and then another impact on the whole ecosystem. So I think The winter, by the way, feels like summer 2017. So, and I think the perspective is huge because the environment, the financial storm is so big that we will see central bank adoption and that will propel the whole ecosystem way up.
Perfect. Thank you very much to all of you. Had a lot of fun. And we will be around on the conference, so if you would like to talk to us in person, then don't hesitate to. Thank you very much.
Yeah. Bye.
Thank you, Alex.